sauce in it.
Alright, welcome guys, welcome to my channel. If you're not currently subscribed to this channel, I would advise you hit the subscribe button and let's get it going. So I don't want to waste your time. You want to trade Forex? Okay, I'm gonna tell you how to trade Forex. Forex is one of the biggest thing right now. Look, Forex has been around for a very long time, but it's just that a whole lot of people seem to be showing more interest right now. Forex can change your life if you know what you're doing, and Forex can also ruin you and make you shirtless if you don't know what you're doing. So you have to, just like any other business, you have to take it serious right from day one. First impression is everything when it comes to Forex, because your capital is everything. If you don't have anything, you can't make anything in Forex. So all you want to do is make sure you keep your capital, guard it with everything, and know what you're doing, and then boom, you're probably gonna be on your way to winning, to more winnings. Now you want to start trading Forex, so you need a platform, you need a broker, you need to do your research to see who is the best broker, who are the brokers, what do they do. Forex market is actually a market that about $4 trillion exchange hands every day. Think about that for 1 minute. I can't even wait for that. You know, that's a whole lot of money exchanging hands. That's how fast you can actually turn your life around trading Forex. And imagine if it goes the other way too. I don't want to talk about that though. Alright, so what you want to do is research broker, because Forex, there's no central place for Forex. There's no central office for Forex. Forex is traded by people like you and I, and people like you, me, myself, companies, countries, different people, investors and all that. So people are always trading this market everywhere in the world. This is a 24 hours market, a market that never sleeps. Even if there's a public holiday in your country, trust me, other people in their countries are trading it. There's no downtime. You can always make money even while you sleep in Forex. This is a perfect 24 hours market where everything and anything can be made, and the only thing that they trade in this market is currency. Only basically currency, nothing else. So the first thing you want to do to get started in Forex trading is to, number one, get a reliable broker, because this market has no central place. So good brokers are actually hard to find. I will not lie to you. A whole lot of people who have actually been ruined in this Forex business have actually been, most of it has actually been caused by them choosing the wrong broker. In your own case, you want to do your due diligence to finding a very good broker that is not going to be a cheat, because there are too many brokers cheating people. You know, they just play against you and make you lose all your money, and then ask you for more funding and all that. So after you've actually done your research and you've done your funding, you've finally chosen your broker, then you now download their trading platform. This is a MetaTrader 4. This is one of the most important trading platform in the Forex market. Today I'm actually using Owanda's trading platform. This is actually not an endorsement for this broker. I mean, this is just what I thought I could just think of, that just came to my mind when I was just looking for a platform to download. And so this is definitely not a preference or an endorsement to this broker. You know, you have to do your own due diligence, your own research as to which broker actually fits your financial condition, and you know, it's going to help you out. So after you download the platform, you want to come to file, then you want to open a new demo account. So come to open an account. Remember, it has to be a demo account, not a live account. A live account is actually the one that you have to put your real money. But since I assume that you really don't know what you're doing right now, that's why you probably stumbled on this video. So you want to open a practice account. Now we have option 1, then we have the option 2. You can, you know, I probably just go with 1, you know. Next, the new demo account, make sure it's a new demo account. Next, expand income, yes. Then agree. usually this thing is set to 100,000 US dollars, but I like to be more realistic, so I usually change it to like 10,000. A whole lot of people would never be able to start with 100,000 US dollars, you know. So you want to be more realistic. Put it at sometimes I even put it at $1,000 and see how fast you can. You know what? We're gonna make it $1,000 because I think a whole lot of people will find that easy to start with. So boom, it's gonna give you a very pop sound, like boom. Yeah, that's it. So the account has been set up, so I want to go to finish. Now you see my account has just been funded with 1,000 US dollars. Yippee! Oh. Now, so I have a brand new account right now. So what I want to do is trying to set up my chart. I'm gonna introduce you to these things that you need to know and all that. Everything. One good thing about this platform is that everything that you find on it can actually be moved around. You know, you can play, you can arrange your stuff, you know, all that. But I first need to introduce you to this platform first. Now, who are the players? There are three major players in the forex market. We have the broker, we have the banks, then we have the retail traders. Well, we under the banks, you can say we have investors as well, you know, because they are almost like on the same side when it comes to forex trading. You know, the retail traders are far on the right side, where all the rest are on the right side, and the only person in the middle is the broker, because the broker is the one that actually provides the platform for you to trade. And without the broker, there's no way you can actually, yes, you can actually enter the forex market without the broker. But if you actually try to enter the forex market without the broker, that means you need to come with a whole bunch of money, because there's no leverage when it comes to that. It's the broker that actually gives you the leverage to be able to trade forex market. I'm gonna explain all that in this video. Now, you basically want to. Now, let me just quickly share you the functions of these people that I've mentioned. The broker is definitely the one giving us this platform, all these things, the chart, the indicators for us to be able to trade, the money, the transactions, the pairs, the currency pairs, and all that for us to be able to trade. The banks are the ones bringing the money to give us the liquidity so that we can trade, we can actually execute things on our own and all that. So based on that, you can call it liquidity or you can call it leverage. Without that, there's no way we can actually participate in the forex market, because it's actually going to cost us so much money to buy a lot, even in this forex market. Now, what do I mean by lot? The currencies are actually priced in sizes or in volume. So we have three types of lot sizes. We have the macro lot. We have the micro lot. We do have the macro lot, but that's too small. No, that's nothing to reckon with. So I would just start with micro lot. So we have the micro lot, we have the mini lot, and then we have the standard lot. The micro lot is, it actually contains of about 100 units of currencies. You know, the mini lot contains about 1,000 units of currencies, while the standard lot contains 100,000 units of currencies or volume. I'll show you what I mean right now. Now look at this. Now these are pairs. Look at this place. Now these are currency pairs. This is the market price that you have to do. If you can't see this, I can actually pop it out so that you can see it right now. Now let me say I click on Euro USD. Now these are the lots. This is what I mean by lot sizes. You can choose. This is a standard lot actually. This is, if you click on this now, buy or sell, which simply means I'm saying I want to buy 100,000 worth of units of Euro USD. The quick thing that you need to know is that the currency at the front is actually the one that you're buying. The one at the other end is the one that you have, or that you're paying to get the one that you want to get. All right, so in this case now, Euro USD, that means I have dollars and I want to buy euro. All right, so the dollar in this case is the base currency. So So in this case now, if you look at this prices now, you're gonna need about $1.12 to buy €1. So that is the current exchange rate. This is one of the services that the brokers are actually offering to us to be able to trade forex market. Because if you cannot see those prices and you're just placing your order, that means you're trading blindly, and anything can happen. At any time they can tell you didn't come into the market at $1.12. You actually came into the market at $2.12. so you bought high and you're gonna sell high, bro. But in this case, you're seeing what you're doing, and there's always going to be a document in this. Now look at this. These are my trades right now. I still have my $1,000 intact. I'm not in any trade right now. So what I want to do is like that. Now basically, if you click on this now, it's going to show you sell market and buy market. So what you're simply looking at is that one good thing about forex market is that you can actually make money when the market even drops. When the market goes up, you make money, and when the market drops, you also make money. So what you definitely, if you want to make money when the market is going up, what you want to do is click on buy order. And when the market is dropping, what you want to do is click on sell order. Now look at this one. This is market execution. If I click on buy right now, it's going to be buying at the current market price. But if I click on sell now, it's going to be selling at the current market price. But if I don't want to choose the market, maybe I feel that this price is way too high, this is overpriced, I could just set it to pending order, and then I could adjust my buy limit. Buy limit simply means maybe I feel like, maybe if I want to, for instance, if I want to buy this Euro USD right now, and I want to set it to maybe at if I set it to 112.64, that this is the highest price that I can pay for this thing. Anything above 12.64, right now is actually at 12.66, 366, yeah. 12.366. That means I don't want to buy. If I had already set my buy limit at 12.64, even if it gets to 66, it's not gonna buy. It's gonna pick up my buy order at 64. So anything above that. So one thing is that I'm rest assured that I'm never gonna buy at a price that is higher than what I have set. Now, then for the sell limit too works the same way, that you want to sell, but you want to enter a sell order. You want to enter a sell order if you feel like the market is going to drop, then you want to place a sell order. So it's just like the opposite. In the business they say buy low, sell high, right? So in the forex market too, if you want to sell, you want to enter your selling, you want to sell a market or a pair, you want to set a point to enter your sell order at a very high price so that you can sell low and make money. You don't understand. So what simply means this: I make money when the market drops. It's the same pips. What you're simply chasing in forex market are pips. These are pips. Look at this now. This market just jumped from 364 to 370. That's a bunch of pips. That's a bunch of, now from 364 right in our own eyes now is actually at 378. Can you see that? That is more than 10 pips. And on a standard lot, one pip is actually worth $10. So if I had entered this market while we were talking now at a standard lot, this is a standard lot now, at a standard lot now, I would have made $100. Okay, now let me do a blind trade for you to see now. No, I don't want to do. I'm still gonna come back to explain the buy stop, sell stop, and all that. But let me do a quick market for you now. I want to do it at the current market price, because the market is actually very volatile right now. So let's just say I want to believe that this market is still going to be going up. I'm just assuming. I've not done any analysis, just for the purpose of this video. I may enter this market now and it may drop. But let's just assume that this market is gonna keep going up. So I'm going to click on buy order. But if I feel the market is going to come down, what I want to do is I want to click on sell. but right now I feel that market is still going to go up. So this is, I've not done any analysis, so I click on buy order. I'm buying only one lot, which one standard lot, which is going to give me $10 per pip, and if I lose two, I'm going to be losing $10 per pip. So not enough money. Oh, it says I don't have enough money. Oh, I'm sorry. So that means I have to reach, or like you saw, I'm not able to buy a standard lot on this trade. So on this account, because this account was funded with just $1,000 US. So I definitely need to buy a mini lot with, in the real sense, without no leverage, I would need $1,000 to buy one mini lot, which is exactly how much it cost. But because of leverage, and I'm using the leverage of 1:50, that's just like 50%. I need to bring like 50% for me to be able to get a mini lot. So if I change this thing, notice that it was at one full lot before, which is the standard lot, and I could not buy anything. It told me I didn't have a sufficient fund. You see, I had not enough money. So I definitely need to make it a mini lot, take it from standard lot to mini lot, and boom, I'll be able to buy something. Okay, I need to close this. Close, bring it up again, change it to mini lot, which is already at mini lot, then buy. Yes, now look at this. I'm in now. I'm live. This trade is, yes, it's in now. The spread the spread is actually the difference between the bid price and the ask price. That is the margin that actually goes to the broker. That's where the broker actually makes money. So that's the amount that you have to pay to be able to execute the trade on the broker's platform. So that's how they make money. So the spread, this is actually the spread. The spread automatically gives me a loss of -220. So that's what the spread is. So now I want to wait to see if I make money or I lose money. So the spread is about 2 pips, 2 or 2.5 pips, you know. So basically what happens is that if I should close this position right now, I'm gonna be at a loss. This is my balance, $1,000.80. I actually made a trade before this video, so I gained 80 cents. But if I should close this trade right now, that means I'll be closing at a loss. And so this is going to be my real money value. This balance is going to change to 998. Don't forget, this is a demo account, and this is a margin. What this margin, because I'm using the leverage of basically the broker, like I said, the broker has to give you leverage so that you'll be able to trade in the forex market. Since we don't have all the money to bring to the table to be able to buy a standard lot or mini lot, it costs a lot of money. So we all need leverage to be able to play in this field. So what simply means is that the broker actually has a protection against itself too. If your equity value should fall below 50%, because I'm using a leverage of 1:50. If my equity value should drop below 50%, I am losing all the money in my account, or almost all the money, or whatever is left, they'll leave it. So what happens at that point is that the broker is going to fall. Definitely, I don't want to close this position at a loss. But if this trade keeps going against me, Forex can be very funny. Now you see -$1.50. You feel like that's nothing. You might come back here tomorrow, the same trade, you might see -$250, because it's a very volatile market. It's a very volatile market. You see 434 now, and the next moment you see 534. Because it's a mini lot, either I lose or I gain $1 per pip. So every movement, either up or down, it's a pip. So if it changes to 35 now, that's 1 pip. 36, that's 1 pip. Whether it goes down or up, it's a pip. So right now, since I bought a mini lot, so I'm making $1 per pip. So, and if it goes down now, because it's a buy trade, so I only make money when it goes, or if the market goes up. So if for every movement that it makes, I make $1 per pip, and every movement that it makes downward, I lose $1 per pip. So right now I'm still in a loss, and yeah, that's basically what that's all about. So there's this thing that we call margin call. The broker wants to protect itself too from losing. So what happens is that if I should lose 50% of my account, and that means that if this equity should drop to like $500, the broker would have no choice but to close my trade. Whether I want to close it or not, the broker will forcefully close it at 500 loss. They have to protect themselves because they don't want to sustain any further losses too. So they have given you the protection that your account can actually bear. So if at some point they feel like no, the money in your account is about to finish and they will not be able to cover the losses for you because they don't want to expose their own equity to the market to the market fluctuations, so they would forcefully help you close your position, and that is called margin call. Now, what do I mean by position? This trade that is here that I've opened is a position. So right now I only have one position in the market. So if I want to open another position, I can click on Euro USD and then say sell. But right now, there's something that some people do in Forex market. They call it hedging. Because there are a lot of ways you can actually make money in this market, actually, if you know what you're doing. They call it hedging. Hedging is taking a position of a buy. Now, like this position now, it's a buy position. Like I've taken a position on Euro USD and it's a buy. So which simply means I make money when this market goes up. Now, if I want to take another position that is a sell, if I take another position on the same pair, which is sell, which simply means if this market goes down, I make money, but if it goes up, I lose money on that second position. That is hedging. So which simply means if I open another position and I sell, when you sell in Forex market, you are betting that the market is going down. If you think the market is going up, what do? You buy. If you think the market is going down, what do? You sell. It's as simple as that. So if you're buying, you apply the same principle in the business world: buy low, sell high. If you're selling, you apply the same business principle, which simply means sell high, sell low. You understand? You want to sell at a very high price. You want to enter the market at a very high price and then come out at a very low price. That's how you make money, because you make money in a downtrend when you are selling. When you are buying, you make money in uptrend. You need to understand the difference. So what I want to do, if I open a sell order now, which simply means either the market goes up or down, I'm still gonna make money. That is hedging. At that point, you are not losing, you're not gaining. So it's gonna be like even. That usually happens when you really don't know where the market is going and you're not sure or something. But when you now finally know what the trend is, you can now actually close one position that you think that, oh no, now I'm convinced the market is an uptrend, or maybe the market is a downtrend. Then if you're convinced, then you can begin to close the ones that are actually against it. But that thing that you're doing when you buy and sell the same currency is actually called hedging. But Ohanda broker does not support hedging. You see, if I try to sell the same currency right now, you see, there's a hedge is prohibited. They don't allow it. But there's some brokers that actually allow you to hedge. You're not gonna lose, you're not gonna gain. But when you're convinced that the market that is actually going on a direction, then you can close out on the other one. And there are different ways to make money from the Forex market too, like rollover and all that. This is a very good strategy to make money from rollover. But in other videos, we're gonna be talking about all that. This is just like a basic introduction to Forex. So, and then that is that. Then we have the Euro JPY, that's Japanese yen. That's the base, Japanese yen being the base currency. A whole lot of people like to trade Japanese yen with the US dollar and even GBP. I don't see GBP, but if you want to add more currencies, all you gotta do is right click and click on Forex and look for the one that you look. I like GBP JPY. That's Great Britain and Japanese yen. GBP JPY. Oh my goodness. Where can I see this? I remember I used to trade this for a very long time in during 2009. You know, I traded this thing. Is very, that pair is very, I mean, was then very good for rollover interest. That you have to keep a trade all night and the broker pays you an interest. I don't know why Honda does not have this pair. Oh my goodness. Oh my goodness. Really? Yeah, this is it. This is it. Can you please add it to my... Oh my goodness. Well, I guess Honda is a little bit different from, not so different. Not so different. Shouldn't be different actually, you know. But there are some. These are the preferred pairs that they have made available. But you can add as much as you want to it, so that you can, or you can simply just go. If you want a shortcut, you can just say show all. That's it. It can just tell you everything. Can show you everything, but it's just that I don't like to do show all because it makes it so cumbersome for me to be able to figure out exact one that I want to see. You know, sometimes you have your favorite, though you can remove them as you want. Though if you don't want them, you can, you know, remove them from the example. You can say hide. If I say hide this one, it's gonna take it out, and then I can actually right click, you know. No, okay. If you can just keep hiding them one by one, or say remove all. You can remove hide all and then begin to add the ones that you want to add. And then, so you want to check the high and low too. High and low is actually good to, you know, to check. You can expand this panel so that you can see very well what's going on. This is going to tell you the highest that has been sold for the day and the lowest price that it has been, you know, that it has been for the day. I mean, this gives you a lot of clue too as to what kind of trend might be for the day. Yeah, you know, this one is currently at 1816, and they said the highest for today is 1814 and the lowest for is 1809, which simply means it has currently broken this level, and this is on the new level now. 1816 is a new high right now, so very soon they're gonna record that 1816. So that could be a pointer as to if this might be in an uptrend already. But you know, you never know. Don't just follow the trend until you confirm, because some trend may not last. So that's how people lose money, because they jump too much on the bandwagon. And because, you know, this market is actually traded by everybody anywhere in the world, so there are a lot of cowboys who play around with their money in this game, and they think that they've actually gotten a trend. Actually, some people are actually not even looking for a trend. They're just looking for a fast way to make money, and it works well for some people though, you know. So you want to look at all the tools that you can do. Now these are so I'm actually going to talk about more on how you can add your indicators and all that. Then look at this panel right here. You have the history of your trades, the trades that you have made. You have the history. Then you have the alert. This is going to tell you the news, what's going on, some news. In my next video I'm going to talk more on the news, how you can actually use news to trade, and also I'm also going to do a video on technical analysis, how you can actually make it to trade. Then you have the alert. That's going to tell you if there's any new thing that is coming up. That's very good too, but you can also set your own alarm too, so that you can make it custom. Mailbox, this is going to tell you any email you have from Honda, from your broker. They're going to share it with you if your documents have been approved, if this maybe you want to have a withdrawal and all that, or you're making a deposit. Market, this is actually new. Not all brokers are the same. They said it's talking about what people are doing in the market. Scalpers are those people who take short profits. They don't stay in a trade for a long time. They only trade for a very short time and take fast profit from the market. Those are called scalpers. They're just scalping the market. A whole lot of brokers don't like scalpers. They don't want you to, you know, because these people, they profit from arbitrage, news and all that. We're going to discuss all that in the next video. Then we have the signals. Usually people who join signal, you know, forums, you get trading signals and all that. Articles, people keep writing articles about currencies, finances and all that. Now people who like to write their own codes to be able to do auto trading and all that. experts. These are the people who do automated trading too. You know, you can save your codes on your chart so that they can trade for you. They know when to buy, when to sell, when to come out, how to set your stop loss, how to set your exit point, and all that. And then journal. You know, this is has to do with your own trade. When you came out, what you've actually set, your stop losses and everything. You can see it at a glance and all that. And don't forget, you can also move around these windows, this chart. You can move around the chart and choose your own, you know, move it around. You can. I basically don't use broker's suggestion. I like to do my own stop loss, but for the purpose of this video, I'll just use what they said so I can set it real quick. So I'm using that. Their own take profit. They said I should take profit at this 12,390. And what price did I get in? I got in at 12,383. So they wanted me to take price at 12,390. That's not much. That's not really much. And if I got in at this doesn't make sense though. I got in at this price 12,383, and I set my stop loss at 12,390. Ideally, no, this is not gonna work. You can see I can't even click on this because I mean, like, yeah, you can't set your stop loss above the price that you entered, except you are using a trailing loss. This broker does not allow a trailing loss. A trailing loss simply follow your profit. As you're making profit, now I'm at $20. Now it will be adjusting. It will just be adjusting my stop loss, taking it from maybe from 83 to 84 to 85, just to be tracking those profits, just to make sure that if the market turns back and start dropping, I don't go below what all those profit that it doesn't eat up into my profit. But there's no trailing loss option here. You know, I remember there used to be a whole lot of brokers then that offered trailing stop loss actually. But this broker does not even allow you to modify your trade. So if you actually enter a trade on Oanda and you didn't set your stop loss or take profits, you're a gunner, man. Like, you're dumb money. You can't even do that. So you have to do that right from the time that you want to enter. So now if the current price is 12.37, I can set my stop loss to 12, because you also need to give yourself a breathing space, because the market is so volatile and you don't want the market shouting and all those up down movement to just, you know, eat your stop loss and take you out of the market even before the market now finally choosing a trend. Because there's so much noise in the market, especially when there is news, you know. So you want to leave room, you know, enough room for the market to move down, move up, down, you know. And you don't want to set your stop loss too close. An ideal thing is to make your stop loss maybe 30 pips away from the actual market price. You want to make it 30 pips away. If it's too close, the market is probably going to trigger your stop loss pretty soon, especially when there is news like this one. Now a lot of stop losses would have been cut in this market. A lot of stop losses would have gone in this market, whether up, down. I'm sure for this candlestick to go up, it must have gone down first too before it starts going up. And this only a news can do this, not technical analysis does actually not change the trend. It doesn't move anything in the market. It only helps you to monitor what's going on in a quiet market. But when you are looking for a big candle, a big opportunity to make money like this is news. These are news. It's only news that can actually do all these things, and this is when the money is made, because money is made 20% of the time. The other 80% of the time, dumb money. People are losing money. Like, you lose more money in a quiet market, but that should be in another video for now. But for now, we're just talking about the platform. You know, we're talking about the candlesticks. Then we've talked about how you can enlarge and zoom in, zoom out. Then this is where you find your different indicators that you can use to monitor the trend, just to tell you what is going on. And you can even have your own custom indicators right here: MACD, high exposure, RSI. They have good indicators actually on this platform. Then you can set your time, 4 hours. You can watch the chart for 4 hours, 1 hour. You can see what has been happening for 1 hour. You can see what's been happening for 4 hours. You can see what has been happening for the whole month. This gives you a bigger trend, it gives you a bigger picture of what has been happening. Because one thing that you would notice in Forex is that it all depends what you see or what you feel the trend is actually based on what chart you might be looking at some point. Now, if you're looking at, for instance, the same currency, this is a monthly chart, right? Now let's look at the 1 hour chart. The 1 hour chart says it was previously in a downtrend and now it's actually going up, right? The 1 hour chart makes it look like it's actually an uptrend. Now let's look at the 30 minutes chart. The 30 minutes chart also confirms that it's still in uptrend, like going up, higher highs, higher high. The candles are actually getting higher. Then the 15 minutes suggests that the downtrend is probably over. Like this is the last candle. This is like the last candle, so it's actually changed now, and this is a doji. You need to go and learn about candlesticks actually, because the pattern or the shapes of the candlestick would actually give you an idea of what is going to happen next in the market. All the shapes, they have something that they are doing. Dumbbell, doji, different shapes. You need to go and learn all that too. I'm going to show you in this video where you need to learn and what you need to learn to read and all that. This is what the 15 minute chart is showing us. Now let's look at 5 minute chart. The 5 minute chart shows us that this thing is about to go on a downtrend again. So people might be prepared. People who are actually looking for short-term traders who are actually looking for small movement in the market might be preparing to sell. 5 minutes is too short. That's really crazy. Like, watch 1 minute chart. This is like the craziest of all. Like, people who are just jokers. Only jokers actually use this chart. Like 1 minute. What do you think? These are not even real. Like, the market has not even done anything, and then you're thinking, because most of these candles are not real. Like, these are just like figments of reality. Now let's look at what the weekly says. The weekly says this thing is actually in a steady uptrend too. The monthly is always the bigger picture. Like, this is where the big people actually look at. Even Bollinger Bands, as you can see, is actually squeezing at this point. After a while, it's gonna bust. I mean, you need to learn about Bollinger Bands and all that, but that's too complex for now. I'm gonna do a video on all the analysis, technical analysis, fundamental analysis. I think that's gonna be my next video actually, but this is just like a basic understanding of what Forex market actually does. And I'm just giving you a different ways that people see the market. It depends on the chart. How you see the market actually depends on the chart that you're using. If you see uptrend, maybe it could be the chart. Maybe you're using 1 hour chart, 5 hour chart, monthly chart or something. So some of the currencies, sometimes the 1 month chart will be totally different from what you're seeing on other lower time charts. So it all depends on what chart you're using. And this last one is actually a template. You can actually use this one to do like a customization. You can, after you've finished all these putting Bollinger Bands, these are indicators actually. After you've added all these indicators on your chart, you can actually save it. Save the template, as you wish, and all that. So basically, what else do you need to know about that? So I've explained to you what a margin call is, and then which can actually happen once you've lost most of your account. And Forex market is actually not a game for the faint-hearted. You really need to know what you're doing, because this market is still gonna go where it's gonna go. It doesn't matter what you think about it or how much your money is. And the thing is, you should always try to protect your capital in Forex market. once you lose all this money that you have, this is your capital actually. Once you lose all this, and this is equity, this is the true statement of, if I close this trade now, like for instance, now I want to close this trade now, I would have made 60 cents. So I've closed this trade now. So now this thing has transferred to my even before I close it, I still gain 20 cents. Okay, so right now my balance is 1,080 cents. So in this trade, before the end of this video, I just made 80 cents. But this is not the real money though. I wish it was real. I would have actually used it to buy some candy. So you should know that the market will do what it wants to do. What you want to do or what you want is not relevant to the market. The market will go where it will want to go. Whether you just bought with your last money or with your 401k, the market does not care. The market will still go where it will go, you know. So you really want to know what you're doing right from day one, right from the time you're starting, and then do your best to keep your capital, because once you lose all your money, you are out of the game. You cannot give what you don't have. If you don't have anything in this market, you cannot make anything. Nothing. You need something for the broker to be able to give you leverage. And if you don't have nothing, there's no way that the broker is going to give you no leverage. So you need something to make money, to make something. So you always want to keep your capital so that it can last. And then, you know, you want to follow the trend. Follow the trend. Don't be greedy. Don't be fearful. Follow whatever you're doing religiously. In my next video, I'm going to be sharing a whole bunch of information on how to trade. This is just like introduction to Forex, but this is really not how to trade. Then I'm going to actually share with you how to trade and all that. Thank you for watching, and I'm definitely going to be releasing another video this week to show you the rudiment, the real aspect of trading. That's what you really want to know, because I'm going to talk about fundamentals, technicals, and how people lose money, how the big investors actually trade Forex, which is definitely what you should be doing, not just playing with all those jokers, you know, saying they're Forex traders and looking to make money every minute, you know. Like, this is something I've been doing for a very long time. I started trading in 2007 actually, you know, though at some point I had a long break, almost like 5 years break, you know, because I blew up my account in 2010. You know, I blew up a kind of $30,000 US in 2010, you know. So I took a long break, then I got back into it and all that, and now I'm more mature and I know what I'm doing more now. So
got that sauce.